fix that.
Hey, today we are going to talk a little about assumable loans. That's something you may or may not have heard of. As a realtor, periodically I get this question, and more often today because rates are higher. I've been getting this question like, is it possible to assume a loan, a lower interest rate loan with rates in the 6.5, 7% range? And people know there are lots of loans out there that are, 3% or 3.5% or 2.8% or something like that. So we do have this question periodically, and I want James to talk a little about what. Okay, so it's not too good to be true, but what loans are actually assumable?
Yeah, that's a great question. So I'll answer. Yeah, what is an assumable loan, and specifically what loans would be
Sure.
assumable? So if you have a loan on your home, I can, in the process of purchasing your home, I can assume the loan that you have.
Right.
So it's exactly what it sounds like. And what loans are assumable? Most government loans are assumable. So most people have what's called a conventional loan, which is
Hmm.
not a government loan. So conventional loans are not assumable, but government loans can be assumable. So that's FHA, USDA, and then VA. Primarily, VA loans are the ones that you'll see most often are assumable.
Okay. So how does it work if I am interested in this process and I happen to identify some properties that I think, well, gosh, they probably have a good loan on that property. I'd like to assume that. How does it work?
Right.
Right.
What you would do is you probably had already gotten pre-qualified by a lender before. That doesn't really
Sure.
matter
Right.
other than you have an idea of what a lender would pre-qualify you for. You're going to have to talk to that lender directly. The assumable loan is going to be serviced by a lender. Someone's going to be taking that payment each month, and you got to talk to that
Okay.
lender. Yeah. And then you would get
All right.
qualified by that lender, and yeah, you would assume the loan.
So tell us about, like, is it a good deal? I mean, is this something that people should be angling for? I know it's not real common.
Yeah, that's probably the biggest challenge is that it is very hard to find. So, again, it's really just going to be those government loans and really only a VA loan that's going to be assumable. So they're just very hard to find. So that's probably the
Right.
biggest downside. Um,
That's
but
been my experience. They are hard to find. I agree.
mhm. But really, the only other like kind of catch is that because of the way an assumable loan is done, you as the buyer have to come up with whatever difference there is in equity from the current loan to the
Okay.
home price. So let me just
I
put that
see.
in numbers real quick. Let's say that
Got it.
there's $100,000 loan on a
Hmm.
home, and you want to buy the home for 300,000. So the
Hmm.
difference is 200,000. You got to come up with that 200,000 in
I see.
cash, basically. That's your
So
down
that
payment.
that gap, that equity gap, you have to make up that difference in cash, or
Right.
got it. Okay, that
Correct.
makes
So
sense.
that's kind of the biggest. I wouldn't even call it a downside per se. It's
Hmm.
just it's a something that you have to contend with. It's something you got to deal with when you're looking at a assumable loan. But again, the other really big challenge is finding them.
Right. So it's a well kept secret, but it's also difficult to find. I mean, it's not, you don't stumble across these
Exactly.
all the time. They're rare.
Exactly.
They are rare. I know.
Yeah.
Had a handful of opportunities even in my career to deal with assumable loans, so it's not
Yeah.
a common thing.
But think about it. If you can find a home that you love and the interest rate, if you get a normal loan, is going to be 7%. If you assume this loan, it's going to be 3%.
Sure.
Save $400, $500 a month or something crazy. So
So the flip side of this would be for sellers. If you have a loan that you think is assumable or that you know is assumable, market the heck out of that. If it's something that's at
mhm,
a low rate, that's a big deal, and you
yes,
should promote that heavily. If you have a
yes,
VA loan at 3% or 3.5%, that should be a big part of your marketing. Is trying to, especially if you've only been there a relatively short time and you have not this major equity gap to make up for buyers. So
absolutely. And call your servicer, and they will tell you.
yes. What else? How should people get in
um,
contact with us about if they have questions?
yeah, you should drop a comment or click on our links to our social media. You can message us or give us a call. And I would say if you're looking for an assumable loan, happy hunting.
Happy hunting. Exactly. Very good. Thanks. Good to see you.
Cool.